So we're now on individuals earning both from compensation and from self-employment or business or practice of profession. For mixed income earners, the income tax rates applicable are the graduated tax rates under Section 24 for compensation income, and for income from business or practice of profession, he has the option to be taxed at graduated income tax rates prescribed under Section 24 or 8% income tax rate based on gross receipts or gross sales and other non-operating income in lieu of the graduated income tax rates. Paano makaka-avail ng 8% income tax rate and or receipts and other non-operating income? So, ang 8% i-apply natin sa gross receipt plus other non-operating income. So, what are the conditions para magamit natin tong option na to? Kasi kung di natin gagamitin tong option na to, ang gagamitin na tax rate will be the graduated income tax rates under Section 24. For compensation income, ang gagamitin talaga Section 24. For business income, merong option to use the graduated tax rates or the 8% tax based on gross receipts and other non-operating income. Income from business or practice of profession should be subject to the following conditions in order that business may avail the percent gross receipt tax. If the gross sales or receipts and other non-operating income do not exceed the VAT threshold. So, kailangan hindi mag-exceed sa VAT threshold. Ang threshold ngayon ng VAT ay 3 million. If the gross sales or receipts and other non-operating income exceed the VAT threshold, the individual shall be subject to graduated income tax rate. Now, kahit na hindi nag-exceed sa 3 million threshold, VAT threshold, yung gross receipts and other non-operating income ng business, hindi pa rin siya makaka-avail ng 8% kung VAT registered siya. Kasi may mga VAT registered na below 3 million yung gross receipts nila. So, kung ang registration ay VAT, hindi pwedeng mag-avail ng 8% income tax rates on gross sales, receipts, and other non-operating income. Ang haba ng title, no? Ang title ng 8% ay 8% income tax rate on gross sales or receipts and other non-operating income. Kasi yun yung covered niya eh. Gross sales or receipts and other non-operating income. Kung merong compensation at saka may self-employment or business, we do not allow on the business the 250,000. Kasi ang assumption doon, yung 250,000 na apply na doon sa compensation income. Kukomputan natin ng 8% at babawasan natin ng 250 exemption, kailangan purely business income lang yan or purely practice of profession income lang. Kapag ka may compensation income na kasama, hindi na babawasan ng 250,000 yung business income. Diretso nang ia-apply yung 8% income tax rate on gross receipts, gross sales or receipts, and other non-operating income. Paano ba ito paiigsiin? Napakahaba ng title. Let me call this na lang 8% income tax rate on GSR and OP. GSR and OP. So, pag sinabi kong 8% on GSR and OP, ito na yung tax rate na 8%. Makaka-avail lang ng 8% GSR and OP kung purely business income. Once may kasamang compensation income, assumed na yung 250 na i-minus na dun sa compensation income. What if the compensation is not more than 250? May crossover ba ng balance? Wala. Walang crossover ng balance. Okay? Hindi pwedeng yung hindi nagamit na portion dun sa 250 ay i-apply sa business income. No, there is no provision for that. On the contrary, hindi daw pwedeng i-crossover or i-apply yung excess under the said graduated tax rates, the excess of the 250 over the actual taxable income is not deductible against the taxable income from business, practice, or profession under the 8% income tax rate option. So, yun. Very clear. Hindi pwedeng A-. The total tax due shall be the sum of the tax due from compensation computed using the graduated income tax rates and the tax due from self-employment or practice of profession resulting from the multiplication of the 8% income tax rate with the total of the gross sales receipts and other non-operating income. Mixed income earner who opted to be taxed under the graduated income tax rates for income from business or practice of professions shall combine the taxable income from both compensation and business or practice of profession in computing for the total taxable income and consequently the income tax due. So, ang scenario, yung isa, nag-avail siya ng 8%. So, kung nag-avail ng 8%, separate yung computation ng compensation tsaka ng business income. Kasi hindi pwedeng pagsamahin dahil magkaiba ng tax rates. Now, kung yung business income ay hindi naman gumamit ng 8% income tax rate, sasamahin na lang yung gross compensation at tsaka yung business income to compute for the income tax due. Kasi pareho naman yung tax rates na gagamitin graduated tax rates ang gagamitin. So, dapat i-add kasi it was mandated here Mixed income earner who opted to be taxed under the graduated income tax rate for the shall, kumbaga, mandatory, dapat ganun ang gagawin. Pero kasi kung iisipin mo kung accountant ka, pwede mong paghiwalayin para bumaba yung tax rate mo. Kasi yung compensation mo, masasubject sa mas mababang rate. Kasi kung bababa yung income mo pag dinivide mo yung income mo, bababa yung rate applicable Pero pag kinambine mo yan, pataas kasi ng pataas yung tax rate. So, lalaki yung tax na babayaran mo. Pero dito kasi sabi, pag mixed income earner shall, mandatory yung term. Hindi sinabing may combine. So, ang rule is to really combine the compensation income and the business income to apply the graduated tax rate. So, be careful with that. Noon kasi parang pwedeng paghiwalayan yung compensation tsaka business income. So, you can apply a lesser tax rate on the business income. Pero this time, mandatory na pagsamahin. So, let's study the illustration presented here. Mr. Mag, a financial controller of JAB Company, earned annual compensation in 2018 of 1,500,000, inclusive of 13-month and other benefits in the amount of 120,000. But net of mandatory contributions to SSS, aside from employment income, he owns a convenience store with gross sales of 2,400,000. His cost of sales and operating expenses are 1,600,000 respectively. Non-operating income of 100,000. His tax due for 2018 shall be computed as follows. If he opted to be taxed at 8% income tax rate on his gross sales from his gross income from business. So, anong sabi natin? Pagka nag-avail siya ng 8% income tax rate, separate yung computation ng compensation income at saka ng business income. So, here, the total compensation is 1,500,000. And then, meron siyang non-taxable 13-month pay benefits maximum of 90,000. Dito kasi sa problem, sabi nila kasama na yung sa 1,500,000 Lahat ng benefits niya, pero wag lang yung contribution sa SSS at PhilHealth na i-deduct na yon. Ang nandito, yung 90,000. Yun yung assumption. Di lahat ma-minusan natin ng 90,000. Ito lang, sinabi kasi kasama dito sa 1,500,000 yung non-taxable 13-month pay and other benefits. Yung net taxable compensation income niya will be 1,410,000 na lang. Computation of the tax due will be on 800. Yun yung bracket, di ba? Yung 1,410,000 doon sa bracket na 800,000 and above. On 800, merong 130,000 tax due. In excess of 800, merong 30,000 tax due. So, So, 1,400,000 minus 800 times 30. This is the remaining tax. So, i-add natin dun sa 130, we have 313,000 tax due on compensation income. Now, we go to the business income. So, magkano yung gross sales receipts niya? 2,400,000 plus may other non-operating income siya. 2,500,000 lahat times 8%. The business tax due will be 200,000. The total tax due will be the business tax due and the compensation income tax due. So we have 313 plus 200,000. We have 513,000. Read the explanation. The option of 8% income tax rate is applicable only to taxpayers' income from business, and the same is in view of the income tax under the graduated income tax rate and the percentage tax. So kung nag-avail ng 8% income tax, hindi na magbabayad ng percentage tax. Hindi subject sa VAT yung business, VAT is 12% of the selling price. Kung hindi subject sa VAT, ang applicable business tax sa business na yon ay 3%. So every month, magbabayad ng 3% on gross sales or receipt yung business sa BAR instead of the 12% VAT. Okay, the 250,000 mentioned above is already incorporated in the first tier of the graduated income tax rates applicable to compensation income. His tax due for 2018 shall be computed as follows. If he did not opt for the 8%, so paano natin ko-compute? Applying the graduated tax rate instead of the 8% tax rate. So ito yung total compensation niya minus yung exclusion. Ito, we call this exclusion from gross income. So we have this gross taxable income, compensation income. Now yung gross sales niya, na-compute natin as 2,400,000 minus 1,000,000. We have 1,400,000 plus operating expenses. We have the net income from operation plus other non-operating expense. So itong total business income natin, i-add natin sa compensation income natin to arrive at the total taxable income. At saka pa lang natin i-apply yung tax table. O hindi na siya nagbumagsak dun sa on 800,000. Nandun siya sa 2 million bracket na. On 2 million, meron na siyang 490,000. In excess of 2 million, 32%. 310,000 times 32%. We have 99,200. 589,200 yung total income tax for the business. Lahat na to, kasama na kasi yung compensation dito at saka yung business. So, ito na, isang computation na lang, 589,200. Compare natin dun sa isa. Mas maliit, no? 513,000. Ito, 589,000. So, may advantage. In some cases, hindi lahat ng cases, mababa yung may 8%. So, pag-aaralang mabuti. Kasi in this case, mas mataas yung tax rates lahat kesa dun sa may 8% tax. Plus, magbabayad pa siya ng 2,400,000 yung sales niya. At yung gross sales niya, 2,400,000. Subject pa yan sa 3% percentage tax. Malaking bawas sa taxes itong 8% tax in most businesses. So, bagong option na 8%. Another example, on February 2019, taxpayer tendered his resignation to concentrate on his business. His total compensation income amounted to 150,000, inclusive of benefits of 20,000. His business operations for taxable year 2019 remains the same. He opted for the 8% income tax rate. So yung example natin sa taas, at this time, ang kanyang compensation income is 150,000 lang. Meron pa siyang exclusions from gross income, non-taxable benefits. So, 130,000 na lang. There will be no tax on this because ang exemption is 250. Ito, 130 lang yung income niya. Pero, kung titignan ninyo, merong 120 na excess yung exemption. Now, yung gross sales niya times rate, meron siyang 200,000 na tax due and payable. Pero look at the example, hindi na ma-minus itong 130 dito sa 2,500,000 to arrive at 8%. Sineset aside na to, hindi na kino-consider. Walang crossover. Kung kulang kung sobra man, wala na. Maganda kung sa ganung situation, mag-ano ka na lang, Huwag ka na mag 8%, mag-ano ka na lang, graduated tax rate para ma-apply mo yung 250,000. Pero kung malaki yung gross receipts mo, lugi pa rin. So, you study very well kung saan makakatipid. Iko-compute mo talaga pareho. You cannot assume. Illustration number 8. Mr. WBV, an officer of AMBS International Corporation, earned 218 an annual compensation, 1,200,000, inclusive of 13-month and other benefits in the amount of 120,000. Aside from the employment income, he owns a farm with gross sales of 3,500,000. His cost of sales and operating expenses are 1,600,000 respectively, with non-operating income of 100,000. So analyze natin. Meron siyang annual compensation na 1,200,000 inclusive of VAT. Meron din siyang business. Anong option meron siya? Pero kasi 3,500,000 na yung kanyang gross sales eh. So more than the threshold na ito. Hindi na siya pwede mag-avail ng 8% kasi ang threshold sa 8% is 3 million. So in this case, graduated tax rates na talaga yung gagamitin niya. Wala na siyang option. The taxpayer has no option to avail. So, kukumputin nyo na lang based on the graduated tax sales at kasama na yung VAT doon. This time, subject siya sa VAT kasi 3 million yung business income niya. Yun lang yung distinction doon. Gross sales niya, 3,500,000. Hindi na siya makaka-avail ng 8% at subject na siya sa VAT. Graduated tax rate na gagamitin sa kanya. So, i-add na yung compensation income at saka yung business income to compute for the tax. Okay, we go to the government-owned and controlled corporations. GOCCs, government agencies, or instrumentalities shall pay such tax rates upon their taxable income as imposed upon corporations or associations engaged in a similar business, industry, or activity. The following: GSIS, SSS, PhilHealth, and local water district. So, generally, GOCCs, government agencies, or instrumentalities. Pero parang hindi pwedeng sabihin eh. Pag sinabi ko kasing government agencies and instrumentalities, ang talagang exempt sila from taxation kasi agencies sila eh. Ibig sabihin, governmental yung function nila. Pero pag sinabi natin GOCCs, pag GOCCs, ano sila eh, proprietary function. Therefore, subject talaga sila sa tax. Yun yung pagkakaiba. Pag sinabi ng government agencies and instrumentalities, tax exempt yan kasi governmental ang function yan eh. Pero pag sinabi mong GOCC, government-owned and controlled corporations, these are private corporations manned by the government. So, ang nature niya private, therefore taxable siya as private corporation. Unless the law itself exempt this from taxation. Katulad nitong Section 5 ng ating train law. Ine-exempt talaga itong GSIS, Social Security and PhilHealth. Pero wala itong tax exemption na to under Section 5, taxable sila. So, tandaan nyo, GSIS, Social, PhilHealth, Local Water District, these are all taxable entities kasi involved sila sa proprietary function eh. Hindi naman governmental sila eh. Hindi pag sinabi mong government agency, yung mga ano yan eh, local government units, national government, o yung mga arms doon, yung mga departments, bureaus, commissions, yun yung mga government agencies and instrumentalities. Pero ito, mga GOCCs ito eh. So, owned and controlled, doing proprietary function. For business kasi talaga tong mga to. So, taxable talaga sila. But, the law on taxation, the train law, specifically exempt this for GOCCs from taxes. Section 4, income tax rate on non-resident alien individual. Non-resident alien engaged in trade or business within the Philippines. Tsaka non-resident alien not engaged in trade or business in the Philippines. Yung isa, non-resident engaged. Isa, non-resident alien not engaged in trade or business. Kung non-resident alien engaged in trade or business siya, kung paano tayo nag-discuss doon sa resident and citizen, yung sinasabi kong 8% at saka graduated tax rate, applicable sa kanila yan. Pero pagdating sa non-resident alien not engaged in trade or business, subject sa final tax na 25%. Upon the entire income received from all sources within the Philippines by this taxpayer, such as interest, cash, or property, dividend, rent, salaries, wages, premiums, lahat ng klase ng income niya, regardless of name, subject yun sa final tax rate na 25%. The preferential income tax rate before has already been vetoed. That was included in the train before, but the president has already vetoed that portion wherein a non-resident alien not engaged in trade or business, wherein some of the non-resident alien not engaged in trade or business are given preferential tax rate of 15%. Ito yun, no, yung mga employees ng regional operating headquarters of multinational companies, area headquarters, offshore banking units, and petroleum service contractor and subcontractors. Yung mga employees dito noon ng mga multinationals, meron silang preferential tax rate na instead of 25% on gross income, 15% lang sa kanila. Ayan yung tinatawag na power of the president to veto. That was just the veto of the president. Now we go to illustration 9. Ito yung alien employed in multinational corporation. Since petroleum service contractor siya, no? May service compensation income siya na 5 million. Ang computation ng tax din niya, ginamitan ng graduated tax rate. All employees of our revenue headquarters, revenue operating headquarters, offshore banking units, and petroleum service contractors and subcontractors shall be subject to regular income tax rate under Section 24, graduated, as amended, without prejudice to the application of preferential tax rate under existing international treaties if warranted. So, merong option dito sa discussion dito. Kasi no, nagtuturo ako, ang sinasabi ko lang talaga, kapag meron siyang income na 5 million, that 5 million will be subjected to the 15% tax rate or 25% gross. Kasi nga, sila, non-resident alien not engaged. So, yun yung tax rate nila. Pero dito kasi sa discussion dito, sabi, pwedeng gamitan ng graduated tax rate or yung preferential tax rate. Siguro, kung alin yung mas beneficial, yun ang gamitin niya. Kasi allowed naman under this regulation. Allowed na mag-compute using the graduated tax rate or the tax rate na 25%. So, if we're going to compute for the 25% here, magkano tong 25% ng 5 million? So, pwedeng gamitin yung 25%. Mas maliit 1,250,000 lang kaysa gagamitan mo ng graduated tax rate. O kung saan mas maliit yung tax na babayaran, may option na gamitin ng alien. Pero hindi ko nakita kasi ito I'm not so sure of this provision, kung saan nanggaling tong all employees shall be subject to a regular income tax rate under Section 24A. Hindi ko alam saan galing yung tong provision na to, hindi ko pa nakikita. Hindi ko nakita sa pag-aaral ko. Ang nakita ko lang ay yung 25% or 15%. But having been said here, so we might as follow this illustration. So, pero kung gagamitin natin, 25%, mas makakamura yung taxpayer. So, yung taxpayer, gagamitin nun, 25% na lang. Income tax rates on certain passive income. So, maganda tong passive income, kailangan nyo tong i-memorize. Generally, the rate of tax on passive income is 20%. Generally, kung meron kayong doubt, 20% yung tax dun sa passive income. Bumababa lang yung tax rate kapag favored activity yon. Ibig sabihin, ini-encourage ng government na gawin yung activity na yon then the government will give tax benefit or holiday for this activity. Sabi, kailangan ma-memorize nyo itong passive income. Ano ba itong mga passive income na ito? Kasi pag itong passive income, hindi nyo kabisado, mai-include nyo siya sa ordinary income niyo. So, passive income may either be a form of compensation or business income, but the law segregates it to be subjected to a final tax because income received is seasonal or not on a regular basis. Hindi palaging tinatanggap ng tao to. Hindi to on a regular basis. Instead na magpa-file pa yung tao sa BIR, yung tumanggap ng pera sa BIR, hindi na kasi baka makalimutan pa dahil minsan lang nangyari sa buhay niya eh. So, ang ginawa ng batas, ang magbabayad na ng tax ay yung taong magbabayad sa kanya. Kasi yun usually ang may business, yung magbabayad sa kanya. Payer, ang magbabayad ng tax directly sa BIR, hindi na yung income earner. Yung income earner, pag tanggap niya ng pera niya, net of tax na. Example niyan ay yung mga sa deposit sa bangko, di ba? Pag nag-deposit tayo sa bangko, meron tayong interest income doon. So, instead na tayo na nagkaroon ng income, ang magpa-file sa BIR ng income tax return natin, hindi na, yung bangko na mismo. Kukuhanin na kaagad ng bangko yung 20% income tax dun sa ating savings deposit interest para ibigay sa BIR. Certain passive income, pag sinabi nating passive income, yung final tax nakuha na o yung complete tax nakuha na dun sa income na yon, na-remit na nung nagbayad ng income. Hindi yung tumanggap ng income ang responsible, kung hindi yung sino ang nagbayad ng income. The rest from any currency bank deposit and yield or any other monetary benefit from deposit substitutes and from trust funds and similar arrangements. So, yun yun, 20%. Eto, tingnan nyo, makikita nyo kapag preferred transaction ito or preferred activity, mas mababa yung tax rate, hindi na 20. Interest income received by an individual taxpayer except a non-resident individual from a depository bank under expanded foreign currency deposit system. So, ito yung mga foreign currency deposit. Ini-encourage natin yan para mas malaki yung natin, commercial means natin to finance transactions. 30. Proceeds of preterminated long-term deposit or investment in the form of savings, common or individual trust funds, deposit substitutes, investment management accounts, and other investments evidenced by certificates in such form as prescribed by the Bangko Sentral ng Pilipinas. A final tax shall be imposed based on the remaining maturity of the investment. So, 4 years but less than 5 years. Habang tumatagal, mas maliit yung tax rate, 5%. 3 years but less than 4 years, 12%. And less than 3 years, 20%. Bumalik na siya sa 20%. Royalties, except royalties on books and other literary works and musical compositions, 20%. Tignan nyo dun pagdating sa books and other literary works and musical composition, 10% lang. Kasi these are encouraged activities. Pampayaman ng kultura natin to. Paglilinang ng ating kulturang Pilipino. Prices, except prices amounting to 10,000 or less, 20%. Ito iba yung prices sa winnings ha. Yung prices, ito yung mga awards, yung mga kumakanta yung sa The Voice. Kung sa The Voice yan nananalo, yan mga Miss Universe, beauty pageant. So, 20% yung tax nun. Bago nila tanggapin yung prices, hindi actually tax-free yon. Ang ibig lang sabihin, prepaid yung tax nung contest. Kunyari, sinabi nilang 1 million ang prize, tax-free. Ibig sabihin nun, ang matatanggap nung mananalo is 1 million. Pero pag sinabing 1 million ang price pero hindi sinabing tax-free, ang ibig sabihin nun, makukuha lang nung nanalo ay 100,000 kasi 20% yung tax doon. Hindi sinolder nung sponsor yung tax. Winnings except Philippine Charities Sweepstakes and Lotto winnings amounting to 10 million or less, 20%. Pero pala yung sa PCSO and Lotto winnings, before kasi, tax exempt lahat. Ngayon, taxable na yung winnings ng PCSO at saka Lotto. Kaya lang, pag 10,000 or less, yun lang yung tax exempt. Pag less than 10,000, exempt siya. Pag more than 10,000, 20% tax. Cash and property dividends. Cash and property dividends, 10%. Capital gains from sale of shares of stock not traded in stock exchange, 15%. Capital gains from sale of real property, 6%. So, pag nagbenta ng lupa, yan o, 6%. Itong capital gains from sale of shares of stock not traded, tandaan na, not traded in the stock exchange is 15%. Kasi kung traded yan, hindi yan part ng passive income. Part yan ng ordinary income kasi yun yung merchandise nila is stocks. So, hindi yan part ng 15% passive income. Tandaan ninyo to, tabisaduhin nyo ito kasi hindi to pwedeng pumasok sa gross income ng business or compensation. Interest on bank deposit, royalties, prices, winnings, proper cash and property dividend, capital gains on sale of shares of stock, capital gains from sale of real property. So, kabisabihin niya 10. You go to the exclusion from gross income. We've already discussed during the presentation on the old tax code, RA 8424. Di ba yung exclusion? Ang general formula natin, all income, whether legal or illegal, minus exclusion from gross income, you arrive at the gross income. So, these are the exclusions from gross income. As we've already discussed this in the presentation of the RA 8424, di ba? Yung life insurance, proceeds, amount received by the insured as return of premium, gifts, bequests, and devices, compensation for injuries or sickness, income exempt under treaty, retirement benefits, gratuities, income derived by foreign government, prizes and awards in sports competition. Yung prizes and award, yung prizes na pinag-usapan natin kanina sa passive income, taxable yan. But this prizes and awards, we've already discussed this, di ba, yung mga cultural purpose. Then we have the 13-month pay not exceeding 90,000, the minimis benefits. We've already discussed that. Yung GSIS, SSS, Medicare, and other contributions, gain from sales on bonds and debentures. Okay, these are all exclusion from gross income. We should not form part of the computation.